Okay, now let's take an example under non-integral foreign operation. Now please remember the translation rules. Now in case of a non-integral foreign operation, when you want to translate a foreign currency trial balance into reporting currency, all assets and liabilities, doesn't matter if it's a fixed asset or your cash, debtors or creditors, all assets and liabilities will be translated using the closing rate of exchange. Is that clear?
Yes, sir.
And then you are supposed to translate all items of income and expense using an average rate of exchange. And the same rule, opening stock at opening rate and closing stock at closing rate of exchange. Now let us go ahead and take on this example under non-integral foreign operation. Yes.
Moonstar has a branch at Virginia, USA. The branch is a non-integral foreign operation of the Moonstar.
Is that fine? Moonstar, an Indian company, reporting currency rupees. Foreign branch, it is in
Virginia,
okay.
USA.
So therefore it's going to be US dollars will be the foreign currency. Next.
So trial balance of branch as at 31st March 2012 is as follows.
Okay.
So particulars in US dollars, debit column and credit column. Office equipments 48,000.
So office equipment given as 48,000 US dollars. Next.
Furniture and fixture 3,200.
$3,200 debit balance.
Stock April 1, 2011 $22,400.
Now that is your opening stock given. Next.
Purchases $96,000. Sales $1,66,400. Goods sent from head office $32,000. Salaries $3,200. Carriage inward $400. Rent, rates and taxes $800. Insurance $400. Trade expenses $400. Head office account 45,600 credit. Sundry debtors 9,600, sundry creditors 6,800, cash at bank 2,000 and cash in hand $400.
Okay.
That's it, sir. Items.
Adjustments.
The following further information is given. Number one, salaries outstanding $400.
So salary is outstanding $400. Now what is already paid and given in the trial balance? The salaries amount.
Yes, sir. I'm checking.
What is
salaries $3,200, sir.
$3,200 would have been already paid. Another $400 are not yet paid outstanding salaries. In case you want to pass a journal for this, what is the entry? Salaries account debit to salaries outstanding. That means what? Your salaries amount will increase by $400. And also there will be a salary outstanding liability of $400 in your trial balance in case you want to prepare an adjusted trial balance. Okay, that's what is asked for in this question. Next.
Second adjustment, depreciate office equipment and furniture and fixtures at 10% per annum at written down value.
So what you can do is you can pass an entry in case you want to bring this into your trial balance. So let us assume the company is not maintaining a provision for depreciation account. The entry will be depreciation account debit to asset account. And what is the rate? 10%, right?
Yes, sir.
It's going to be 10% on $48,000 for office equipment.
$4,800.
And 10% on
$3,200.
which is $320 for furniture.
Yes. Next, head office sent goods to branch for 15,80,000 rupees.
You know, this will be the rupee value of the goods received from head office.
Yes, sir.
Is that fine?
$32,000 given. So here
the actuals, the amount is given. Next.
Head office shows an amount of 20,50,000 rupees due from branch.
So that is the amount due to head office. Now tell me in the transfer, what is the head office account credit balance given?
45,600.
And that rupee value is how much?
20,50,000.
That is all, because amount due to head office is amount due from the branch from the head office standpoint.
Yes,
Next.
sir. Stock on 31st March 2012 is $21,500.
That is adjustment number
5.
5. Next.
There were no transit items either at the start or at the end of the year.
What is the meaning? There is no cash sent by the branch to head office in transit.
Or goods.
Or there is no goods sent by head office to the branch in transit, nothing.
Yes, sir. Now, last item, on 1st April 2010, when the fixed assets were purchased at the rate of exchange was 43 rupee to $1.
Okay, this rate is not relevant because it is a non-integral foreign operation.
Operations.
Next.
On 1st April 2011, the rate of 47 rupees per dollar. On 31st March 2012, the rate was rupees 50 per dollar. Average rate during the year is 45 rupees per dollar.
Please don't calculate, okay? Take the rate given. 47 on a particular date, opening. Closing is rupees 50. And on average, rupees 45 through the year.
Prepare. Trial balance incorporating adjustments given converting dollars into rupees.
That is all. Prepare an adjusted trial balance. Converting the US dollars into INR, the Indian rupee.
So which are the solutions, sir?
Yes. Considering the adjustments. Adjustments 1 to
7.
Okay. Consider these adjustments. I think they are asked only for taking all the adjustments and don't consider closing stock in your trial balance.
Sir,
okay.
yes, sir.
So now we shall go ahead and take on the trial balance. Just see the solution out there.
Yes, sir. They
First order particulars.
Yeah. Debit and credit US dollar.
In dollars.
The conversion rate.
If you want, you can write conversion basis, where you can write in words. You want to use a closing rate or average rate. Is that fine?
Yes, sir.
Or you can write the rate itself. And then in rupees, debits and credits. Is that clear?
Yes, sir.
Now we shall start. What is the first item?
Office equipment.
Let's consider this amount after minusing depreciation.
Yes, sir. 48,000 minus 4,800, 43,200.
So $43,200.
At 50 rupee conversion
At
rate.
a closing, remember I said for non-integral foreign operation, all assets and liabilities will be at the closing rate of exchange. Opening stock, be careful, take the opening rate. Closing stock, closing rate. Yes.
21,60,000 rupees.
Nothing but $43,200 into rupees 50 a dollar an amount. Next.
Depreciation on office equipment 4,800.
Remember debit balance.
Yes, sir.
So the entry is depreciation account debit to asset.
Yes, sir.
Asset goes down and in that place there's a new debit. That is your depreciation expense. $4,800.
And 50 rupees, 2,40,000.
Take the closing rate of exchange for depreciation. It's not like any other expense, right? It is on fixed asset. Next.
Furniture and fixture, 3,200 minus 320, therefore $2,880.
Again, the closing rate 50 rupees a dollar.
1,44,000 rupees.
And then $320.
Depreciation on furniture 320, $50, 16,000 rupees.
50 rupees a dollar amount. Next.
Next stock on 1st April, $22,400.
At opening rate, take 47 rupees and translate.
So 10,52,800.
Next.
Purchases $96,000.
At average exchange rate.
45 rupees, 43,20,000.
Next.
Then sales $1,66,400.
Again average rate 45 rupees.
74,88,000.
Next.
So goods sent from head office 32,000 debit, 15,80,000 given.
The rupee value is given in the question. Write under conversion based what actuals. If you want, you can write. Next.
Then carriage inward 400, 45 rupees, 18,000.
Being an expense at 45 rupees a dollar. Next.
Salary 3,200 plus outstanding 400 and all 3,600.
That into rupees 45 average rate expense.
1,62,000.
Whereas a salary outstanding is a liability. Use a closing rate of exchange.
Yes, outstanding salaries 400 credit, 50 rupees conversion rate, 20,000 credit.
Next.
Then rents, rates and taxes $800, 45 rupees, 36,000 rupees.
Being an expense, average rate. Next.
Insurance 400, 45 and 18,000
and
rupees.
18,000.
Trade expenses 400, 45 and 18,000 rupees.
Next.
Next, head office account 45,600 credit balance.
And show the amount under credit only, but rupee value how much?
Actuals 20,50,000 given.
Exactly. Next.
Then trade debtors 9,600, 50
Closing
rupees. 4,80,000.
Next.
Trade creditors 6,850 rupees, 3,40,000.
Closing rate. Next.
Cash at bank $2,000, 50 rupees, 1 lakh.
Okay.
Cash in hand $400, 50 rupees, 20,000.
Okay.
And the exchange gain.
Now here
balancing
remember, in case of a non-integral foreign operation, the exchange gain or loss depends on whether you get the balance on the debit side. It's an exchange loss. On the credit side, as an exchange gain will not be recognized in profit and loss account. Instead, the exchange loss or gain will be recognized as foreign currency translation reserve and shown in your balance sheet under the heading reserves and surplus. It's a loss FCTR in brackets, a debit balance. Otherwise, FCTR without brackets, a credit balance. Is that fine?
Yes, sir.
And we don't recognize the exchange loss or gain in profit and loss account. Yes. What is the exchange gain?
Gain is 4,66,800 rupees.
Have they shown this will be taken to FCTR?
They didn't.
They haven't shown, but please make a note, guys. This amount will be shown as a foreign currency translation reserve. You can write over there exchange gain.
Yes.
Transfer to foreign currency translation reserve account.
Yes, sir.
Got it?
Exchange gain
Will be transferred to foreign currency translation reserve account, FCTR. In the examination, don't hit FCTR, you'll be punished. Okay.
FC.
TR, it's only for classroom purpose.
Yes, sir.
In the exam, you write foreign currency translation reserve. Is that clear? So, learn this example really well for your examination, guys. Bye-bye. Good luck.
Thank you, sir.